Good evening. Good evening. Let's be patient. Let's wait for others to join before we continue. Before we start. So, good evening. What we are going to be treating today? Let me just get on board so fast because we'll be doing a lot of things today. Um, so welcome, guys. Once we're up to 10 now, just kick off. Get Once we're up to 10 now, just kick off. We have a long way to go today. Good evening. Good evening. Good evening, everyone. Welcome. So let's kick off. Let's kick off. So what I'll be treating today, let me present my screen. Let me let me present my screen. So yesterday I said that we are going to be treating um remember what I said about market structure yesterday. In case you are not around to yesterday, you can watch it up on YouTube. It's live, is there. So what wait, I'm coming. Um, Let me continue. So yesterday I told you that we are going to be treating three major things, and today is the last day of the class, so we'll be will be quite fast, but I'll make everything very much easier for you guys. You get me? So, like I said, is number one is market structure, liquidity model, and entry. Then five is trading psychology. So I said I was going to teach these five things, but the thing here is that today is the last day, so I'm not sure we can cover everything, but let's fire on first. Let's see how far we can go. But one thing I need you to do now is I need you to help me for me to help you. So this is just basic market. What I taught people yesterday is just basic market structure. There's many things involved in market structure. There's advanced market structure and all that. But I'm just telling you the basic things you just need to do for you to make money off of synthetic indices. Of course, I cannot bundle the whole forex market and teach you every single thing I know in just 3 days. It's not possible. Yeah, but I just created this model in such a way that I can do this within 3 days and still deliver. So today we are going to be treating liquidity. Okay, in simpler terms now, liquidity is money. At every point in time there is a spike in the market, there is liquidity. So use this thing to know that there is a liquidity. Whenever you see something like this, you see something like this, there is liquidity here in the market. This is a layman's explanation. There are many things involved in liquidity. There are many types of liquidity, but I'm just trying to explain to the barest minimum so we can fly. You get? So this is liquidity. At any point in time, there is a spike in the market, there is liquidity. At any point in time, there is a spike in the market, there is liquidity at that point. At any point in time, there is a spike in the market, there is a liquidity at that point. And at that liquidity point, there's what they call order block. In other terms, if it's in the forex, in the normal forex terms, liquidity is where banks place their own trade. Liquidity is where banks place their own trade. So we always hear this thing that it's banks that move the forex market, it's banks that move the forex market. Yes. So when banks place their own trade, there is always a change of direction in the move of the market. You get? There's always a change of direction in the move of the market. That's why you always hear this in trade like the banks always join the direction of the banks, all those terms and all that. You get? So that's it. So in simpler terms, for you to understand what I want to teach you today, whenever you see something like this V and the O and this up, what do you call it? This is V and the upside down V is liquidity. There's always a liquidity point, and there's always liquidity at that point. Let me take for example now. Let me come to the chart. Let's take for example, you see here now, there's liquidity here. At any point you see something like that, there's liquidity here, there's liquidity here, there's liquidity here, there's liquidity here. So all those points are liquidity points. You get? There's liquidity here, there's liquidity here, there's liquidity here. I guess you should have understood this by now. There's liquidity here. You get? So at every point in time, there's a spike up in the market, forming something like this. These are liquidity points. So for you now, coming to that liquidity point, that place that liquidity happened, that liquidity happened, that zone is what we call order block. Let me now explain to you. What I'll now show you now is how to draw order block. That point that liquidity happened, here is what you call order block. Let me now show you here. You know, it's two candles that form a liquidity point. Um, let's take for example, this one is a bullish candle like this, then a bearish candle, that's the red one. I'll color it red now. So these points now, when you see something like this that happen at this pivot point now, this liquidity point now, you get, there is an order block here at that zone of liquidity. There is what they call order block. So how to draw that order block is this last bullish candle before this bearish candle. You just draw it out. Use this to draw out the body. Sorry, let me use this one. You just draw it out. So this is a bearish order block. Remember, this last bullish candle, you draw it out. Let me delete it again and draw it out again. So you draw it out. This is bearish order block. Remember, we are still on liquidity. This is bearish order block. And then this is bullish order block. Let me draw it out. So the last, um, firstly, you see a bullish candle. Sorry, a bearish candle. Let me color it. This is a bearish candle. Then you now see a bullish candle. Remember, bullish candle is buy, bearish candle is sell. So this is it. So you draw it out from the body of that bearish candle. The body of that bearish candle, you draw it out. This one now is please, if you are following me, can you just type one on the group chat if you understand what I've been saying so far? On the so I say group chat on the comment section. Okay. All right. Thank you so much. Let me continue. I'm glad. So this is a bullish order block and this is a bearish order block. Let me now dive into the chart and show you what it is. Can I permit me to delete all this? You can go to the video again, you see it again. Let me just clear everything. So remember I said like now this now is a bullish order block, right? So for you to draw out this order block now, the last bullish candle, sorry, the last bearish candle before this bullish candle. Let me expand it well so you can see it. The last bearish candle, I guess you can see it clearly now. The last bearish candle here, the last bearish candle before this bullish candle that went up, you just draw it out here. So this is what is called a bullish order block. This one now is bullish order. Same thing with this one here. Same thing with this one here. You can see this. See the last bearish candle before this bullish movement. So I draw it out. Now you can see now. You see the way price came back to this bullish order block and bounced off it. You see it. So the main thing that you need to know, you need to learn how to draw that block first. But that will be assignment that you do on your own after this class. So this is a bullish order block. Name draw out bearish order blocks. So from this point now, you can see this. Let me enlarge it. So this is a bullish candle. Then this is a bearish candle. So the last bullish candle before this bearish move, I'll draw it out. You see it. So this is a bearish order block. This is a bearish order block, right? See another bearish order block here again. See, like I told you, at every pivot point, you see this. At every V, sorry, let's say zero or V. All of them is the same thing. At every spike like this, there's another block here. Something like this too. There's another block here. So let me draw out this one. So see the last bullish candle here. See the last bullish candle here before this bearish move. So draw it out. You can see it, Abby. So see this one too. If you notice, there's a reaction at this point. Immediately price hits this other block, there's a drop. I'm coming again. If I'm coming, let me answer a question. Someone asked, does it mean the OB is the last bearish and bullish candle that took out liquidity? It's English. The bearish last bearish or bullish candle that took out liquidity. Yes. Okay. The other block is a zone. The other block is a zone. You understand? So this last, how you draw it, I'm just showing you how to draw the other block. The last bearish candle, but before this bullish movement, you now draw it out. As simple as that. That's the concept I know. You get? So someone asked another question. Say, is the downward movement the bullish or the bearish? Okay, downward movement is bearish, while upward movement is bullish. Hope you get me now. Downward movement is bearish, while upward movement is bullish. Okay, back to the chart. So see this one here now. So this is a bearish candle. See this candle here. So remember how to draw bullish order block, because we are trying to draw bullish order block here. The last bearish candle, that's this red one, before this green one, right? We'll draw it out and extend it. This is a bullish order block. As simple as that. So if you understand the concept of this order block, can I move on? If you don't understand, you can ask me your question. I want to make sure that we'll cover these things today, and it's very, very possible. Don't worry, I'll simplify it. It's very easy for you. So give me feedback. Give me feedback. If you understand it, just type one on the chat. If you have question, ask before we move on. Sharp, 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 sharp. Let's kick. Let's fly, guys. Okay, I should move on. Nice one. Thank you, thank you, thank you so much. I really appreciate. You see this? Um. Okay, well understood. Thank you so much. All right, let's continue. So in this order block now, there is something called valid order block. See what I'm teaching you here. If you put it, you must make money. I promise you. So this thing now I'm showing you now. So in this order block now there are two types. There are not two types necessarily. There's what they call valid order block and invalid order block. Some people used to call it breaker block and all those ones, but me, the one I know is valid order block and invalid order block. Let me write it out. Valid order block, the short form is OB. Let me just put it like that. And invalid OB. So okay, someone say I don't really get it. Oh, sorry, I just joined. Okay, let me recap. Okay, okay. Sir Simon, let me recap. It's fine. Let me just show it. It's not hard. So, like I said before, for you to draw bullish order block. I thought I drew that in here. Okay, I cleared it. Okay. For you to draw bullish order block, like I said before, at any point in time in this chart now, this whole chart we are looking at now, you see something like this. There is liquidity here, or something like this. Okay, I'll answer that question. Or something like this. There's liquidity here. You get? Or something like this. There is liquidity here. There is liquidity here. So now at this point of liquidity here, bah, here and here now, at this point of liquidity, that zone is called order block. So for you to draw it, remember in that order block, that zone that is called order block. So there are two types of order block. There is bullish order block and there is bearish order block. You get, there is bullish order block and there is bearish order block. For bullish order block, how to draw it is this last. Let me show. I want to make sure this thing is clear for you to see it. I don't know whether it's clear enough now. So this candle here, this red candle here. I don't know where it's clear. There's a red candle here. This is a red candle. The last bearish candle, that is the red candle. Before this green candle that went up, forming this V here. You hear me? The last red candle before this green candle that went up. Let me delete this. You just draw it out. Let me draw it again. You now come on it and draw it out and extend it. There is no particular there's no particular length or measurement to drawing it. There's no particular length or measurement. You just need to just draw it out. That's just it. Then um I've explained bullish order block, then bearish order block. So this is a bearish order block. Let me explain this one. So there is a spike here. You see this? You see it? So there is liquidity here. So we draw out the zone. That's the other block, right? So this last red green candle before the red movement, this last green candle before the red drop, you draw it out. This is- Draw it out as simple as this. Just draw it out. This is bearish order block. So um okay, the essence of drawing the other block. I'll show you. I'll tell you the essence of the other block very soon. Now you see the reason why I draw the other block and what the other block does for you. So the essence of drawing the other block mainly is to draw the zone at that liquidity point. That's number one. So you hope you understand how to draw other block and what is other block now. Please, if you understand up to this point, just can you just type one on the chat? Let's continue. Please can you type one on the chat? Okay. All right. Thank you so much. Mhm. So now, I was saying about something here, valid and invalid order block. I was talking about something here. There's something called valid and invalid order block. So let me use this analogy here. So this is a valid order block. A valid order block is another block that has not been intersected. Let's take for example, this is a valid order block. So the other block is here, right? This is a valid order block. It has not been intersected. So it's still valid, right? It's still valid. So see what is an invalid order block. Let's take for example. This is another block. is another block. Ah, what's wrong? So an invalid order block is normally there's another block here, right? But this time around, price will break through. So there was another block here, right? But then price broke through it, making it invalid. So this is a valid order block. This is an invalid. Let me use upside movement too. So this is a valid order block. You see, it has not been intersected. See, this is a valid in the other block here. So see another one here. So it now comes and is now intersected. So you see, there was another block here, but it's now the price has broken through it, so it's no longer valid. So I don't know. So this thing now, see a valid order block, see an invalid order block. Then the opposite movement this is a valid order block, see an invalid order block. So far, do you understand this one? Because what I want to show you now is the model. Let me. I think I guess let me dive into the chart and show you. Okay. Um, let me show you something. Please permit me to clear everything here and continue. So let me just show the other block on the chart. So this is it now. See a valid order block here. You see this other block now has not been intersected. Nothing has broken through it. But see an invalid order block here. You see this other block. There's another block here, right? You see, it's no longer valid. Price has broken through it. Let me now extend it to it. So you see that price has broken through it. So it's no longer a valid order block. See another one now. See another valid order block here. Let me delete this one. See a valid order block here. See from here now there is a spike move up here. So this one now is a valid order block. Price has not broken through it. You get this one now is still a valid order block. Price has not broken through it, right? Then see an invalid order block here again. This one. See that price has broken through it. Normally, when price came back to it, it reacted, but then it has broken through. So it's no longer a valid order block. So this whole scenario of valid and invalid order block, is it understood now? If you understand this whole valid and invalid order block, can you just type one on the chat? All right, all right. Since you guys understand, okay, all right, nice one. So back, let me show you now the model. We are in the model now. Remember, there is a whole lot involved in this liquidity. It's not something that we can. It's not something that we can clear in one sitting. You get? So let me just. I'm just showing the basic components that you need for you to make money. So see it here. So see the model here. When there is a valid order block, remember in model they are both sell and buy model. There are two model, both sell and buy model. So let's take for example this now is a buy, is a valid order block, right? Then price invalidates it and push up. Once price comes back to this order block, to this valid what are they calling it? To this invalid order block that is here, it will buy. This is the buy model. I will explain, don't worry. So this one now, it was the invalid order block. Price invalidated it, formed another order block here, formed another order block here, formed another order block here. So price invalidated it and formed another order block here. Get? So this one line the invalid order block, name delete this. And price pushed up. Once price comes back to this invalid order block, it will buy. So you place your buy here. Place your buy here. So so this now, your stop loss will be here, then your take profit will be here. Your stop loss will be here and your take profit will be above. Let me give the sell model. Sell model happens like this. So this is another block. So this is another block. Initially it was valid, then price came and broke through it. So it's now invalid, right? And goes like this. Then once price hits this invalid order block again, it will sell. God help us. So this is a bullish order block. This is a buy model. This is a sell model. So I know you could have a lot of questions, but if you don't have, no problem. So concerning this model now, do you have question before I go into the chart and show you? Is this model now that will make you money from the chart? Do you have any question concerning this? Yes, you need to see an invalid order block before you can place a trade for this model. There are many models I trade though, but this is the one that is quite easy that I can we can do here. We cannot finish all of them here. Yeah. So hope I answered your question. So any question, even if you don't understand it, just tell me. I'll recap because I don't want you to waste your time here. Oh. I want you to gain value for your time. Okay, you understand? So anybody with question? No question for now. All right. Let's continue. So now this thing now is the ogogoro of all these things we are doing here. Let me delete it and come back here. And come back to the chat. Let me dive into one hour time frame. So let me now show you where I use this model. So I want to give you live examples now. If someone asks question, say please can you modify the entry model to high time frame to low from the lower time? Okay, no problem. I'll explain all those ones. I'll explain all those. Then someone asks that when you place a buy, once it returns to the invalid order block, it buys. No, you will not place a buy yet. Let me go back and show you what I mean. Ah, who is that model I drew out here? Let me draw it out again. I said there, this is a valid order block initially, then price invalidates it, so it's no longer valid again. It moves up, comes back to this invalid one. You see it's no longer valid, it comes back to it, then you buy. So you need to wait for it to come back to this invalid order block before you buy. So I don't know if you understand this one now. So you only place a buy when price comes back to the invalid order block. Same thing for sell. Price goes up, then it invalidates it. So this one is no longer valid again. So once price hit this invalid one, it will sell. Hope you understand this now. So can I now dive into the chart? Let me show you people. See, but every trader you see must have a model. There is something that they must see before they place a trade. No trader just places trades randomly. You must have a model that you must see before you place a trade. That's just it. So let me show you. I think I want to, let's dive into the chart. I want to show you examples. So with this now, you should start practicing on your demo. To be very frank. Okay, so from here now, we will now use both that major structure and minor structure you learned yesterday to explain. So let's take for example now. Price is going up, right? The major structure is uptrend. You can see it clearly, right? So the major structure is uptrend. Let me show you the model now. Since you know the major structure now is uptrend, See a model here. It's easy for me to identify because I'm used to it. So see a model here. See the invalid order block. You see, this was a valid order block. You see the V, then price invalidated it, then push up. Immediately price dropped back to that invalid order block I drew as now. You see the way it's bought. Can you see it now? So now, someone said I should explain something for him about modify the entry model from higher time frame to lower time frame. Okay, see, this model I'm showing you now, you see it work well on 1 hour time frame and 30 minutes time frame. Use 1 hour time frame and 30 minutes time frame. As long as you know the direction of the chart, whether it's an uptrend or downtrend, you already know the major structure and minor structure. And where I remember what I told you, you need to always trade in direction with the major structure. You get so once you've known all this and find your model, go down to your 30 minutes and look for this model or 1 hour. Then place your trade. Your stop loss will be at this valid order block here. You know there's a valid order block here because there's a V here. See it here. Come on. So there's a V here. So there's another block here. See the other block, the last red candle here before this green candle. I'll draw it out. You see it. So that is another block. So where you put your stop loss is, I guess by now, I hope everyone here knows what is stop loss and take profit. Your stop loss, I told people to make this research that first day about all these basic things. Stop loss, take profit, bullish, bearish. You put your stop loss here, and then you target 1:3. 1:3, I mean, is risk to the reward ratio. That means the portion that is your stop loss is 1, while your reward is 3. That's what I mean. So this is the model in play here. Let me look for another one. So you see another model here, though price didn't come back. See the invalid order block. See the way price broke through it and pushed up. So if price had dropped to this um invalid order block, it will buy. So this is a trade now. I can even trade it tomorrow because price has not dropped down to my invalid order block. So I'll place my buy here. My stop loss will be here, and then my target will be above here. Yes, exactly. Do your analysis on higher time frame. Know your know the market structure. Know where price is heading to. You understand? Know where price is heading to. Whether price is currently in the minor structure or is at the major structure. Then you now drop down to 1 hour 30 minutes and 1 hour and 30 minutes to do for the model. So you see this here now. Okay, let me show you an example. Let's take for example now. This is VIX 25. Let me clear everything now. So let's take for example now from 24 hours time frame. This is VIX 25 now. You can see that price has been going up, right? You see, this is a clear typical uptrend. So what you should be looking for in an uptrend is buy. What you should be looking at in an uptrend is buy. I'm coming out. I'm coming to that. What you should be looking at an uptrend is buy. You get. So now I'll now drop down to 30 minutes time frame to look for the model. So I drew this one out before. Okay, the model doesn't work only on synthetics. I use it to trade forex, though I don't usually trade forex market regularly. I just trade it once. It works on every pair, even on crypto self. I've backtested it everywhere there. You get. So I want to show you people something. Okay, someone asked questions. Secondly, does once you have identified the model on H1, do you go below time those time frame like M15 and M5? Just place your trade on that time frame that you've spotted it and put your stop loss. No need to go down to M5 or M15. Then when marking out your order block, does it have to be the most recent order block? Mm, you always put on realistic trades. Let me show you something. Let me show you something. Let's move out from this volatility 25. Let's go to volatility. Let's take volatility 10. Let me show you an example of a trade I caught recently. Let me show you an example of a trade I caught recently. Let me show you an example of a trade I caught recently. So see this volatility 10 index. From this daily time frame, what do you think is the overall trend? See that price has been falling all the way long. All the way. This thing has been on a downtrend. Correct. Come down. Go up. Come down. So now, let me show you something. So now, since I know this thing is a downtrend now, I go down to 1 hour time frame. See this model here, ba. This model. I don't know if you do view my status on WhatsApp. I posted something like this. See this field order block here. See the valid order block. See the field order block. I gotten on this trade from here, and that was, if you see my stats, I flipped $100, 500 using this. This is the model in play here. So let me delete this and show you what I wanted to show you. See this now. So from here now you can see clearly that this thing now is an invalid order block because this thing now made it invalid. Hope I'm correct. This one now made this order block here invalid. This movement here made this one invalid. So see the invalid order block here. See, but it will take you time to spot this invalid order block and valid order block. It will really take you time, but as long as you are consistent with it and just bring out 30 minutes every day and be looking for this thing, with time, you get accustomed to it. You see it. So hope you can see it now. You see what happened now? This is a today's trade, though. If you see it's current market, this thing. So though I did not take it, though, I did not take this trade. I didn't feel like trading today. So my stop loss is here, and my target is down. Hope people can see the model very clearly now in play. So if you have any questions so far concerning this model and entry, can you just ask now? Okay, makes sense. So what I just dished out for you is what I used to make money from this synthetic indices market. You get? Is it's not a get rich quick scheme like I always say. These things now, this thing I just showed you now, if you can be able to practice it right from the order block, the model, everything I just showed you, the video will be on YouTube, so you can always go through it over and over again. See, someone said it didn't return the invalid. See now, the other block is a zone. It doesn't necessarily need to enter inside it. As long as it's near it, it's still valid. See the way it came, hit it, and start dropping. Same way now. See this one I told you I entered yesterday. See it here. See the way it just came, hit it, and started dropping. I don't know if people understand. Okay, what made me prefer 1 hour time frame to 30 minutes time frame is out of experience. I've seen it work well for me on 1 hour and 30 minutes time frame. The trades I placed, I've seen it work well on 30 minutes and 1 hour more. So that's why I prefer that. So the value I've dished out for you here now, what I need you to do now is I need you to practice and practice and practice. My glasses. I need you to practice and practice and practice and get accustomed to it. You understand? So the work is now the ball is on your court. I've showed you what can make you money from this, starting from the beginning, how to create demo accounts, all those stuff, and for you to practice. Once you have practiced enough, now you can fund your account and start making money. At least with this one that you've learned now. But remember, it's a gradual process. You will not start making $500, $1,000 out of nowhere. It's a gradual process. You get me? Okay, someone asked entry technique. I'm coming. I'll explain that for you again. Okay, like the approach. That's nice one, bro. Okay, I'll explain the entry technique again. Um, what if there are two invalid OBs? Someone said entry technique, right? I want to explain the entry technique now. The entry technique I said is once price we've marked out your invalid order block. Once price comes back to your invalid order block, it will sell at least 70% of the time. So once price comes into that place, just place your sell with normal risk management and put your stop loss above. Then put your take profit. Always target 1:3. Then someone asked if what if there are two invalid order blocks? Which one will you place your limit on? In this case now, it's experience. Me, I know the other block that will be that will go for me because of I've tried it time and time again. There are some questions that I cannot answer. It's you that will get the answer on your own. You understand? It's just experience with time now. You know that yeah, I've played this trade before, and this other block did not respond. This invalid order block did not respond. I think it will react to that one. You understand? So that's it. So someone asked, I'm still asking, sir. Does it mean there is no way one can draw those things? My laptop is having issue. And the things that is step by step. Me, I did not start by having a laptop. I was using my phone. I'm still asking, sir. Then gradually. You understand? So I Can people hear me? I think there is a glitch. Oh. Can you guys hear me? Someone asks, how do you manage your risk? Can people hear me? I think there is a glitch. Someone asks, how do you manage your risk? Okay, first and foremost, managing your risk is your own. Let me put it like this: managing your risk, it depends on your own risk appetite. Let's take for example, I fund $100 account. You understand? Mhm. I might decide to risk $10 per trade. That means I'll use the stop loss that is equivalent. I'll use a stop loss that is equivalent to that. Sorry, I'll use a loss size that is equivalent to that my account. That will be able that if I lose money, I'll lose only that $10 I want to risk for that trade. You get me? So risk management, I've always told people risk management is based on your own risk appetite. That's just it. But the thing is that true, I'll tell you the truth. All this $100, $200, $10, $20, even $10 safe. I advise you to withdraw the money, use it and eat. $50, all those little. That's just the truth. But the thing here is that you can do anything on this market. Let nobody limit you and tell you that you cannot make it off of $10. I've flipped $10. That I'll not advise anyone to do that for now. Don't focus on flipping. Try to make consistent money. I flipped $10 to almost 1,000, 1,000 plus. You understand? So is what you is something that you do by expertise. So risk management is based on your risk appetite. That's just it. But more than anything, find a way to always risk money in such a way that you can be able to trade another day. $100 cannot be your whole money, and you are risking all of them on a single trade. You see, it doesn't make sense. Tomorrow you cannot trade again. That's just the truth. So you must have to take risk in such a way that tomorrow you'll be alive to go into the market again. So another thing I wanted to tell you people is that synthetic indices, their lot sizes varies. I'll send the template on that group chat. Their lot sizes varies. It's not the same lot size for every of them. All of them, their lot sizes varies. That's another one. Then another thing I want to tell you about trading psychology is that first and foremost is you need to think long term for the chart. Secondly, I would love you to to put in the effort. Let me tell you something. This market, but there is greed in it. The moment you start making money from the charts, you think that every day you make money, you make a whole lot of money. Every day you think you make a whole lot of money. Every day you think you make a whole lot of money. But it doesn't work like that. There are some days you lose, there are some days you make. More than anything you can do for yourself is focus on risking a particular amount of money across all board. So when you are making money, like I told you, the risk reward is 1:3. So when you are making money, you can make, let's take for example, you risk $10 to make 30. So anytime you are profitable, let's say across 10 trades, and so risking $10 and you maybe let's say the trade hits your take profit, that means you make $30. That means you are up $20. I mean, you come and risk another $10, you make an extra $30. That means you are up $50. You understand? You see, even when you lose, you can still be alive in the market. So more than anything, I'll advise you to follow a particular risk pattern. Don't come and risk $10 today and risk 500 tomorrow and risk 300 tomorrow. This thing I'm telling you, I'm talking to myself too because it do happen to me up till now too. You get? So that's just it. How do you calculate it? Someone asked, what are your favorite pairs? Me, what I trade mainly is volatility 10, volatility 25, 50, 100. I don't trade all those 1S them. I don't trade them. Why? You might ask why. Why is that? Is Why I don't trade it mainly is that it's very volatile and sometimes they won't allow me to risk the amount of money I intend to risk for the reward. You understand? So it doesn't fit. Some people make good amount of money trading those ones, so but me, it doesn't work for me. So I just focus on what works for me. That's just it. Shout out to my brother Chinedu. So um um one last thing again. Please hope you got value for your time throughout this class. Hope you got value for your time. Hope you got value for your time. With these few things I've shown you now, you can just practice and practice and practice. Yeah, V10, 25, 50, and 100. Those are my favorite. Hope you got value for your time. So, what I need you to do is just go and practice and practice and practice. That's all. So, thank you guys for joining the class. You can always come back and watch the videos. Then, lastly, before all of you leave, please can you just subscribe to the channel, to the Kelvin Trader channel, please. That's the last one before we close. So, thank God for the class. All right, we call it a wrap. Thank you, everyone. You're welcome, brother. So if you have not subscribed, subscribe. Please and please. Thank you so much. I really appreciate. Thank you for your time. All right. Good night. See we'll see you next time. You're welcome. You're welcome, my brother. You're welcome, welcome. You're welcome. So make sure you subscribe, please. That's all. So more than anything you do for yourself, just practice this thing I've showed you. Practice and practice it again. You'll make money off of it. Bless you to my brother. Shout out to my sister. You're welcome. All right. Good night. Thank God for this session. Bless you too, guys. Good night, everyone. We'll call it a wrap.